What's up, you guys? Welcome back to another video. My name is Nick and I talk all about trading and investing. And today you came here because you wanted to talk about flag patterns. Now, if you've ever heard of a flag pattern, it is a really interesting and kind of unique pattern that happens very frequently in markets. And I'm going to go ahead and tell you up front that it works very well in markets that are trending very strongly. A flag pattern, the first thing we need to know if we're going to be talking about flag patterns is that context matters, okay? So when it comes to trading flag patterns, they look something like this. Very quickly, we're going to talk about the basics of it, and then we're going to look at some examples in this move on GJ that we've recently seen. So when we're talking about a flag pattern, you're talking about a market that is basically moving up and then basically consolidating for a moment before shooting up and continuing higher. Our goal with identifying a flag pattern is we are looking at this portion of the pattern and saying, okay, if price starts to break out, I want to be part of the next move higher. The whole idea behind a flag pattern is trying to capture the continuation of a strong trend, and that is why context matters so much. We want to make sure that if we're going to be trading a flag pattern, we have to be looking for markets that are in a very dominant uptrend or downtrend. For me, what this usually means is looking for a fundamental catalyst plus a strong technical trend and trying to identify flag patterns. Now, the reason I have GJ pulled up is because this thing has just been on an absolute tear to the upside. And for a very brief overview of why that is, we are currently, at the time of making this video, we are going through a major recovery from the whole global pandemic. And during those times, the yen is, in terms of some basic fundamental analysis, the yen is considered a safe haven currency because of its kind of stable economy, but the pound is considered more of a risky but potentially faster growing economy in good times. So what we have is, from a fundamental perspective, people selling the yen, not as interested in holding on to risk, less risk currencies, because they would rather go for something that could potentially return more, like the British pound, which has also recovered very well with their vaccination rollout. Okay, this is just an example of fundamentals, or just a quick overview of the fundamental trend here, but that has caused a ginormous uptrend on the GBP JPY currency pair. So when I have that identified, that might be a catalyst that says, okay, I want to be looking for longs. And the flag pattern might just be the technical component that gets me into some of the best trades to capture this, this move here. So again, we highlighted that the idea behind a flag pattern is looking for trend continuation. So in order for us to do that, as always, we have to identify a strong trend first. You guys, if you've watched my channel for a while, you know I really like the 200 SMA just as a very simple filter. There's nothing super fancy or magical about the 200 SMA, but it's just a basic sort of indicator that I use just to identify, okay, this market is clearly moving in the overall direction to the upside, right? So I'm looking at the 4-hour chart, but what we're talking about here can be probably applied to any time frame. I just personally like the 4-hour and the daily chart, as I am more of a swing trader. This concept can be used for day traders, though. It can be used for swing traders. It can be used for any really time frame for the most part. The idea, however, is when we are using the flag pattern, we've got to be able to identify it in real time. It doesn't do us any good to just do it in hindsight, which we're about to do for examples. So I want to just clarify that. What I'm showing you guys is, of course, hindsight. I know what's happened because obviously I can see this chart, but I'm going to try and just give you guys some good examples so that maybe we can see what they would look like in real time. So generally speaking, when we are talking about a flag pattern, in theory and in textbook, you're going to get a lot of perfect looking ones. Of course, like I said, you get something like this. It looks perfect, and then it goes like that. This is not, just because it's a pattern doesn't mean that when it does occur in real time, it's going to perfectly work out every single time. You should know that no pattern, no indicator, no fundamental or technical analysis is going to be 100% correct all the time. This pattern is just an idea. It is just an added sort of setup that you could potentially look for that maybe gives you a little bit more of an accuracy in terms of your entry. So let's say that, for example, you are an aggressive buyer of the pound yen. Let's say that you do like this whole uptrend. You agree with the fundamental bias to the upside, whatever reason you decide to be long bias on this pair. And let's say that you identify right here that you could be potentially seeing the formations of a flag pattern. And let's actually do this. I'm gonna show you guys, because TradingView has so kindly sponsored some of my content. They've actually given me a free access to their pro platform. There's a link down below in the description if you want to sign up with TradingView. If you like my charts, definitely check them out. Click that link down below and sign up for an account with them. It definitely helps to support the channel. Anyways, so let's say this is kind of the formation of a basic flag pattern. You've got, again, going back to our textbook example, price moving up and then chopping sideways. And now we are looking for the breakout to the upside. One little cool key component here is that we do see that we did get a little bit of a higher low. So we're seeing clear demand. And that's the whole idea behind this pattern, is we're looking for strong demand that's almost like explosive. We're looking for a push to the next leg higher very, very quickly. And we want to try and capitalize on that. Now, let's say you're an aggressive buyer of a breakout, right? You're basically saying, okay, the trend is up. I want to buy anything that breaks above the previous high. That might, obviously we know in hindsight what happened, but in this case, it probably would have worked out very well, because you're saying, okay, this resistance seems pretty strong. We have sellers in this area, right? If that level breaks, the theory is that a lot of sellers are probably going to have their stops above the highs, and that could cause a run against the stops. And that really is one of the biggest power plays of the flag pattern, because you've got a lot of people who are probably shorting at the top and they're saying, okay, it's got to come down, but if it breaks up, then I'm just going to get out of the way and take a loss, right? We can reverse engineer what a lot of traders might be doing, and that is exactly where this pattern can potentially catch some nice moves, because as soon as price, if it starts to break up, we could say a move, maybe even just a few pips, maybe 2 to 5 pips in this case, above that previous high would be reasoning for an entry, with the anticipation that, okay, from there, sellers might start getting worried, stopping out. And what happens if a seller, if you're short and you stop out, that means you're actually buying back your position. So that causes an influx in buying, which could potentially shoot the pair higher, right? That's the theory, at least. With that said, where would we put a stop and how would we enter? Well, again, I'm giving the example of an aggressive trader who might just buy the breakout. And then I'm going to give you guys the little bit more conservative style as well. One way that is pretty popular for stop loss placements when it comes to using flag patterns, a lot of times people like to put it in the middle of the range, right? So we've got, here's the top of our range, the bottom of our range, right? So we've got the flag, there's the pole, right? And here's the flag, right? So in the middle of this range, roughly, could be a stop placement. Some other people prefer, if they like to put wider stops in their trade, maybe even to put it just below the low of the range, right? So those are two options for you to play around with. Again, as always, this is the purpose of my YouTube channel is to offer you guys ideas so that you can then go test and try out your concepts in your demo and in your back testing practices, right? So when we're looking at this, again, this is the aggressive style. Price breaks through that high and bam, looking to buy the high. And you might say, well, Nick, don't you want to buy low and sell high? Well, as momentum traders, which is what a flag pattern really is all about, it's trying to go with the dominant direction and just jumping in and trying to ride. The idea is, yes, you want to buy low and sell high, but you can also try and buy high and sell higher, right? So although, yes, we are buying the high, the idea is if we know that there's a good chance that we could make another push higher after that breakout, the theory is, yes, we're buying high, but we're anticipating a move higher, and this breakout could cause that sort of influx in move to the upside, right? So obviously we already know what happens because I saw it earlier, and this is, again, just for example. But let's say that we put a stop here in the middle of our trade. So if price does come out, but we're waiting, this is basically, you could do a buy stop. This would be a buy stop because price is higher. If you're setting a buy stop, you're setting an order above the current price to buy. In this similar would be like, let's say if I wanted to do a sell stop, it would be a sell order below the current price, right? So if you're not familiar with buy stops and sell stops, then definitely check those out. You can search them up on the internet and just figure out what that means. But again, if you need more clarification, but the idea is it's a order to buy if price moves up to a level, which sounds a little bit weird, but it can be really good for sort of momentum plays if you have a reason to think that, you know, if price moves up, it can keep going. So again, stop placement for me, I like the idea of just putting it in the middle of a range. I don't want to risk too much extra. So in this case, this is a risk of 66 pips roughly. And then in this case, to the upside, take profit placement. That's a whole nother topic for a whole nother video. For me, I like to trail stops, but maybe you go for something like a 2 or 3 to 1. Obviously, like I said, we already know what happens. We can let this run and we can see that price eventually breaks up. So that would have gotten us in right there. And as it does go higher, the idea is, bam, you would have hit a 3 to 1 on the trade. Okay, and so that's a very rough or you know, quick example of what a flag pattern sort of looks like. But the idea here, guys, is that the flag pattern looks to capitalize on a market that is in what I call a runaway train, right? And this happens more often than not in markets. If you watch my live streams, we often talk about retail sentiment. And we know that a lot of times when markets seem high, retail traders, they tend to think that it is quote unquote too high, right? Or when something is moving really, really down, they say, oh, it's too low, it's got to bounce back. And it's a very dangerous way of thinking when it comes to trading, because momentum can be a very powerful thing. The pound this year has done phenomenal, and it is beating again and again against the yen, right? That is not something to say, oh, that means that it has to come down now. That's showing that there is strength for one currency and weakness for another. And in any situation, I would prefer to be going with the strength and selling the weakness than trying to play the counter trend the whole time. There have been people all along the way here on the pound yen. We've talked about it on stream many times. Many people trying to short into this overarchingly strong uptrend that we can see, although it seems too high, it can just keep going. And this is, again, here's another flag pattern example. Not really a flag pattern. It's not the perfect example. You could argue that here's a flag pattern on the lower time frames, right? Here's another example. And here we'll put the top of it. Here is the supply, here is the demand, right? So you're looking at this market here. There's the flag, there's the pull, there's the flag, right? And then if you were the aggressive buyer, you could jump in right on the break. Now, what about the conservative buyer? Because this is a good example of a conservative entry style as well. Well, the conservative break and retest sort of concept combined with a flag pattern can be very, very cool. So if you're not familiar with a break and retest, it's a very simple concept, but it is something that I use in a lot of my trades. So it's something like this. You get a break above a strong level of resistance, and on the retest, you're looking to get involved. The reason I like this a lot is because it can give you a little bit more of a conservative entry where you say, okay, well, price broke out, but let me get a little bit of a pullback before I try and jump in, because we don't want to, there is risk in trying to buy up here because, price could just do a healthy little pullback as some people take profits, and then you could get trailed out or take on extra risk. So for me, one of my favorite ways is to look for something like this, where you identify, okay, there's a flag pattern, we break out, price pulls back, we're looking to get long on the retest, right? In that case, you could even have your stop in the same spot as the other style where you're more aggressive. But in that case, your stop becomes much bigger, as opposed to if you trade the retest, your stop can be smaller. Now you might say, well, Nick, why not just always do that if it's always going to retest? And that's the thing. It is not always going to retest. Going back to our example earlier, the first example I showed you guys, look at this. There was no retest, right? So price broke out and never really came back to test this area. So this is the point of when we're talking about flag patterns, you have to ask yourself, well, how bullish am I? How aggressive of a trader am I, right? Because if you're a fairly aggressive trader and you want to just jump into the move and capture it, some of the best moves honestly happen like this. Some of the best flag pattern breakouts, they never retest because they're so explosive to the upside that as soon as it breaks, it is running, and it doesn't give any chance for buyers that are wanting to get in late, right? So again, going to come down to your style of trading, what you're more comfortable with. Personally, I'm a little bit more on the conservative side, so I'd be more interested in waiting and sometimes missing the trade. But when I do get in, I get in a little bit at a point where I can take a little bit more conservative entry style. Guys, that's all I've got today for the flag pattern. Thank you so much for tuning in to another video. If you did enjoy, make sure to like the video down below and subscribe to the channel if you want more free trading content. See you next time. Hey guys, thanks so much for watching this video. If you enjoyed it, please remember to like the video down below, because if you don't, you're statistically 84.72% more likely to blow an account in the next 48 hours. Don't ask me how, don't ask me why, that's just facts. If you enjoyed that video and you want to see more free content here on YouTube, I'll be popping up some videos on the screen now. Go ahead and click anything that looks interesting to you, and thank you so much for supporting the channel.